All right, one of the questions we always get when we meet a new client is what steps they should take before they actually buy a house. And the first thing I suggest they do is that they get pre-qualified and pre-approved. Now, pre-qualified basically asks the basic questions about what their income is and what their debt is, and sees what they can actually qualify for, what kind of home they can actually qualify for. Pre-approval actually takes into account their credit history, looks and verifies all of their information as far as their income and their debts, and makes sure that they not only qualify for a house, but that they actually can get approved for that house. And what that helps you do when a consumer gets pre-qualified and pre-approved for a home, it helps them in their ability to negotiate with that home. So for example, if you've got two contracts coming in on a house, one has a pre-approved buyer and one has a buyer that's just shopping, who do you think is going to have a better chance of getting that home? So we definitely recommend getting pre-approved. Now there's 4 things that we're going to look at when we're pre-approving a buyer. We call them the 4 C's. And the first thing we're going to look at is, does the borrower have the capacity to pay for this house? Now, when we're looking at capacity, we're looking at 2 things. Number 1, what do they qualify for? And number 2, what do they really afford? And we're going to look at their income, and we're going to look at their debt load, and we're going to see those ratios, their debt to income ratio, and we're going to see what their actual capacity to pay for this house is. The second thing we're going to look at is their cash, and we're going to look to see, do they have enough down payment for this home? Now there's multiple loan programs, starting with an FHA or a USDA loan with very, very little down, all the way to a conventional loan where you can go as 20% down or even more if you want. And we're just going to verify that the consumer actually has the down payment, the cash, for the house that they're looking at buying. The last thing we're going to look at, or the third thing we're going to look at, is their credit. And we're going to want to make sure that this borrower has a good credit history. In the past, you could get a home with pretty much any credit. But in today's environment, it's very, very important that you have a really good credit history. Lenders want to make sure that the past history, the past credit obligations that you've incurred on yourself, that you've done a good job of paying those debts back. The fourth thing we're going to look at is the collateral. And that really comes into place when you've actually found a property. And we're going to make sure that the home you're buying is worth what you're paying for it. If you have any questions, don't hesitate to call your lender and your agent immediately. Thanks so much.